the Moneyweb Crypto Podcast, where we discuss all things crypto related. Your host, Kieran Ryan.
How many crypto exchanges are there in South Africa? It turns out there are quite a few, some of them building niche markets for traders and crypto specialists, and some with some really interesting offerings. One of the lesser-known crypto exchanges is Chainx, which has been operating for several years, offering some of the lowest fees in the market. Now, these smaller exchanges are required, like the bigger ones, to be licensed by the FSCA, the Financial Sector Conduct Authority. That happened last year, and it imposes a hefty compliance cost. More regulations are on the way, like the new travel rule, which requires any crypto transfer of above 5,000 Rand to be disclosed to the Financial Intelligence Centre. All of this is part of the plan to have South Africa removed from the Financial Action Task Force grey list. So how do these smaller exchanges survive? To answer that, we're joined by Henko Fortsman, CEO of Chainx. Hi, Henko. Thanks for joining us on the Moneyweb Crypto Podcast. Tell us a bit about Chainx, how you got started, and what market you set out to serve.
Hi, Kieran. Thank you so much for having me. I have read a bunch of your articles, so really grateful to join you today. So, my name is Henko. I have been the CEO since mid-2022 for Chainx. And Chainx really is very near and dear to my heart. It was originally founded by a group of which I was not part of. I only joined the company in 2021, but Chainx itself launched in 2018, so this is our 7th year of operations. And like you mentioned, we've been around for a few years, so we've seen a few bull markets. We've seen when, volume dries up, when it picks up again. And really, Chainx has, from the very start, tried to really service every single person that is interested in cryptocurrency. Now, granted, at the start, we didn't do a great job of that because the focus was really more on the intermediate to advanced level trader who looked for limit orders and stop orders and all of that stuff. But we have, over the last few years, moved the focus to include the beginner, the novice investor through making the dashboard a lot more user-friendly and so forth. So really our focus right now is any South African, any person really that is interested in crypto that can come onto the exchange. They can buy Bitcoin, they can transact. There's a bunch of other coins. But that's really what we look at the moment. If you look at some of the bigger players, Luno, Valor, and so forth, we have a very similar product and a very similar offering that they do. But like you mentioned, we are a lot less expensive on the fee side. So that's really where we've positioned ourselves.
Tell us a bit about your background. You said you became CEO in 2022. The company's been going 7 years. So where did you start off? How did you get into crypto?
Yeah, so I guess my journey started in 2016, 2 bull runs back. So I've been investing in cryptocurrency for quite a while. I've also, unfortunately, been the victim of 1 or 2 scams. So I've really earned my stripes in this industry, especially in South Africa. But yeah, that's where I started getting interested in crypto, bought some Bitcoin on Luno in 2016. I feel like that's probably where most people's journeys start. And then from there, earned my degree in business management economics at Nelson Mandela University. Entered the workforce, started working, did a few jobs, and then, having a passion for fintech and for the financial markets, I looked for a job opening at a crypto exchange. Luckily enough, I knew one of the owners at the time of Chainx, and I started working in the finance department in 2021. And, as time goes on, I bought shareholding in the business, so I became a part owner. And really just my love for Chainx grew, and I got the opportunity to start, leading the ship, and have been doing that ever since.
Moneyweb recently did a comparison of trading fees across the different exchanges in South Africa, and Chainx comes out as one of the cheapest in the country. Now, are smaller exchanges like Chainx having to offer lower fees as a way of attracting clients? You're up against some pretty heavyweight guys. You mentioned Luno and Valor. They are more expensive, but they have a wider offering, or have I got that wrong?
You are 100% correct. So the position that we've taken is due to the fact that we have some limited resources in terms of the products that you can offer. I see Valor recently increased their leverage trading, opportunities, and to incorporate something like that onto your platform takes quite a bit of resources. They obviously recently increased their fees also by quite a bit, and I think that's probably due to the fact that sustaining the business model that they have currently does it costs a pretty penny, so they have to match their business model with what they are offering. But yes, that's why we are positioned, like many smaller exchanges, as a lower cost alternative when somebody necessarily isn't looking just for a quick buy or quick sell. Even though we have that functionality, they can benefit from much lower fees through quick buy and quick sell, through limit trading, depositing, withdrawing. And you are 100% correct. There's no real other stance to take in the market other than being less expensive than, the bigger guys, because you're not going to, outperform them in terms of what the product offering can be. So that's really the option that we have. And it's fine. There are many businesses that have built that way. Capitec is a great example, where they came in as the sixth bank and just undercut everyone, and they've built a great business doing that. So it's not necessarily that it's a bad way of going about it, but it's just the current landscape that we are in that has kind of forced our hand into that category.
All right, I want to come back to the business model in a minute or two, but before that, in the intro, I mentioned the heavy cost of compliance. When you're licensed, you got to submit reports every month to the FSCA. You got to have a compliance officer. Sometimes you do that in-house. Sometimes you outsource that. But one of the new things that is coming in is this travel rule that I mentioned. Any transaction on a crypto exchange above 5,000 Rand, you've got to report that to the FIC, the Financial Intelligence Center. What complications and costs does that involve for an exchange like ChainX?
Yeah, just in terms of the compliance front, I really appreciate that we'll come back to the business model because, as you know, there's a bit of a bee in my bonnet about that. But just with regards to the regulation and compliance, we're obviously grateful for that as an industry. It means that people can feel safer when they enter into a business relationship. And we see a lot more money flowing in and out of crypto now due to licensing. But along with licensing comes a long list of responsibilities, obligations, and one of those is your reporting obligation through the FIC, which we've been doing for a long time as an accountable institution. And so firstly, you need human resources for that, people to review certain cases, review transactions, do the reports to the FIC, do the reports to the FSCA. And so you have to have a compliance officer with experience, because if you don't, then, as you've done all this work to get the license, you can very quickly lose that license if you don't comply with all of these obligations. And so if we think about the travel rule now that you mentioned, that's just another thing added to the list of responsibilities that you now have to oblige by. So the travel rule being implemented from the 30th of April is quite a short time frame, and I spent some time talking to 2 or 3 of the FIC representatives at a compliance conference that I attended 2 or 3 weeks ago, just giving them the perspective from a small to medium-sized exchange, in how it is possible to implement, software or a, program that can allow you to do travel rule messaging, the protocols that you have to abide by, and all of that stuff. That stuff is expensive, to really put it, to not put it mildly. Like, if you think about some of the providers that Luno and Valor and the likes of them use, you're talking about hundreds of thousands of rands a year just to be able to be compliant with the travel rule. Now, if you put that into perspective, that's anything from 5 to 20% of the annual revenue that a small to medium exchange can produce. So, you end up spending maybe 10, 15% of your annual revenue just to be compliant with one of the regulations that's in place. And we are all for regulations, of course, especially so that South Africa can get off the grey list and, investment can flow into our country again. But at the same time, we really are looking for a phased approach, because the FIC really has kind of just put the hammer down, and said, cool, they released the directive, the final version in November of last year, 2024. And then they said, okay, cool, 6 months, you have to be compliant. And if you're not, there's sanctions and there's penalties. So, and what you can do, you then have two options. You can either comply, or you can say, we can't, and we're going to close the business. So that's really the challenge I think that we're going to see over the next few months, maybe a year or two, is whether the exchanges that are, call it small to medium sized, will be able to either, raise funds or find a way, build their own alternatives so that they can be compliant without spending hundreds of thousands a year, just to be able to comply with the travel rule.
I can see that is going to be a challenge, but at the same time, adoption in South Africa is picking up, and this happens in every bull market. I think you'll probably see more customer signups when the crypto prices are rising than when they're falling. So maybe the sign-up has kind of dropped off over the last few months. This brings me back to the business model. You've got other exchanges like Luno and Valor offering digital payment services, all sorts of other things, perpetual futures in the case of Valor. And that's becoming a major source of revenue for them. They've also solved the problem of sending money, Valor Pay and Luno Pay and these other digital channels which bypass the banks. What business model are you following?
Yeah, so in many ways we are, I wouldn't say mimicking them, because, we've been operating since 2018. So many of the features that they have released, we also have, other than maybe the perpetual markets and so forth. But the variety of coins, the ability to transact to external wallets and internal wallets, like you mentioned with Valor Pay, on Chainix, you can also transact with anyone in the world instantly by sending them crypto, to their Chainix account, if they have a Chainix account. If not, they can open up a Chainix account, and you can use something as easy as the email address to send them crypto. But really, the business model that Chainix is currently, employing is to have volume on the exchange, which, as we know, spot exchanges need volume. And so that's really what we're after at the moment, making sure that we onboard as many users as we can and drive volume for the exchange. But at the same time, we are aware of the fact that that's not a sustainable model. And this is what we've spoken about previously. When you are a volume only based exchange, then the future doesn't always look that bright, because like you mentioned now, when prices go up, there's lots of volume, there's lots of signups. When prices go down, people sit on their hands. And if you take the current business model, which Chainix and many other exchanges have at the moment, that's just not sustainable. So I really do see a shift coming in the next year or two towards I almost want to say a bank-like business model, where there's perhaps a small account fee for using the account. Currently you pay for a withdrawal when you want to withdraw crypto, but you're not paying anything for the exchange to be the custodian of your crypto. So there's no account fee that you pay for them to look after your crypto if you keep it on there for a month or a year or 10 years even. And so I do think there will be a shift in the business model where it has to become more sustainable. Otherwise, we'll see many of the firms having to end up probably closing their doors, because compliance and regulation will only ever get more. if we take the banking industry as an example, there was no time where the banks were let loose a bit, where it's like, okay, we'll give you guys less regulation now. It's only ever more regulation. So with that in mind, there has to be a shift to a more sustainable business model where you're not really impacted as much by the cycles that we know happen in crypto, where a year or 2 or 3 year long bear market is not going to necessarily close your business. It might slow it down a bit, but it's not going to close it. Whereas currently, if you're working on a activity-based model or activity-only based model, then you really do take shots when the market is down.
So do you see a time coming when the crypto exchanges begin to behave more like banks in terms of charging a monthly fee, for example, for having just opening an account? Because at the moment you're custodying your clients' crypto without charging them anything, and that's a cost to you for which you get no return.
Exactly, yeah. So if you think about hosting the wallets and the nodes and the security that goes with keeping the client funds safe on a platform, yeah, it's quite a cost on the exchange. And again, like you said, with an activity only based fee, if someone comes on, he buys crypto once and he doesn't transact for a few months or years, you're running up costs, and that user is costing you money. You're not making money off of them, which again brings me back to unsustainable business model. So I don't necessarily think that exchanges will try to take the role of a bank per se. Maybe a Valor looks like they're pushing towards that type of offering where you've got many different things that is offered through the platform, and maybe they'll go to an account fee, maybe not. I don't know. I think they make enough money to not have to. But I do think that the smaller exchanges like Chainix they'll have to shift their vision of what the exchange will be in a year or 2 or 3 years to something more of a asset manager or a broker type platform where you've got maybe advisors helping people invest in crypto, or you've got maybe a kind of a package deal like Revix used to do, or I think they still do it, where clients can invest in a product or in a bundle, and you take a management fee from that. Something where you're adding value to the market, but you're also being compensated for that, instead of just someone coming on and buying crypto once and then you don't benefit from them further than that. So I do think that will be the shift that happens. I don't think all the exchanges will necessarily try and pursue a bank type business model, more a brokerage type business model where you're adding value, but the fees that you earn are more sustainable.
Give us an idea of the size of your customer base and the demographics. What kind of customers are we talking about? Young, old, female, male? Give us an idea.
Yeah, to be honest, I don't think crypto really has a face at this point. And same goes for our user base. We see retired individuals over 70 years old, and we see guys that just turned 18. So I do think the one demographic that I can definitely comment on is the fact that a lot more men are involved in the cryptocurrency industry than women, which I guess in South Africa we are still a somewhat conservative nation. I think that then makes sense, that in most cases the male will either manage the funds or the finances or so on. But that's something that we do see a lot more male accounts. And in terms of location, in terms of race and age and so on, it really is a very widespread. In terms of our user base, we don't have a massive user base like Luna or Valor, but we've got quite a few thousand clients that of course are fully verified and so forth. So enough to span further than South Africa. We've got quite a few clients in Namibia as well as Botswana, Kenya, Nigeria even, and some of the other African nations as well. A few from across the world, but also a bit less, given the fact that it's quite difficult for South Africans or for South African exchanges like us to onboard international clients through fiat on-ramps. So it's quite difficult to get dollars on if you don't have a entity like, for instance, Valla has, an international entity that they operate through, same as OVEX. They have bank accounts outside of South Africa, so they are able to facilitate other fiat transactions. And so that's the one thing I think kind of narrows down the demographic to South Africa, but we do have clients from all over the world as well.
What's the relationship like with the banks in South Africa? I mean, when I was looking at this whole issue of the fiat on-ramps to the crypto exchanges, the banks are charging a very high fee. And it's almost like discriminatory in a way that they charge so much. And this is the feeling I got from speaking to people like yourselves who are running these crypto exchanges. The banks are hostile. Is that your experience?
Yeah, look, I must be careful with what I say, because, currently there's only one bank in South Africa that banks CASPs. So I don't wanna be too critical of the big guys. But I can say that, some of our bank accounts in the past have been closed due to the de-risking of crypto exchanges, or CASPs as we call them, by some of the other banks, besides the one that's currently banking all of the CASPs. And so I do think that it is a hostile environment. If you go into let me not say which bank, but if you go into most of these banks right now and tell them you do anything related to crypto, they just say, sorry, we don't service your industry. And so that really does make it difficult for some of the exchanges where, smaller guys, where they can't necessarily get a bank account now because they firstly can't comply with all the compliance. And maybe they can and they've gotten the license. And even though they have the license now, they can't open up a bank account, which is really, I don't know what that says really from the banking industry, because, the FSCA has deemed a certain company fit if they issue a license. And for the bank then to say, you are too high risk, I don't know, where that gap in communication is between the banking industry and the regulator. But it is definitely a hostile environment right now. If I have to take, us and many of the other examples that I can give, you really have to make sure that you run a tight ship, because you can get axed very quickly. And again, if you don't have a bank account, you can't do business. It's a bit actually a catch-22, because many of these exchanges, let's say you can't open up a bank account. If you don't have a bank account, you can't get a license, right? But you also can't get a bank account without the license. So, now you have the license, but you don't have the bank account, or you have the bank account, but you can't get the license. It's a strange place right now. And I understand the industry is finding its feet. Just straight, it's only been a few months after FSP licenses have been issued. But, I think at the same time, our regulator has shown themselves to be quite good and also really efficient with granting these licenses for an industry that's, only a few years old, with regulation that's only a few years old. They've really stepped in and tried to make sure that the environment or the industry is safe for clients, for the public in South Africa. And I think for crypto to really start hitting a higher level of adoption, we have to see friendlier banks, or at least banks, adjusting their risk appetite, because even at these compliance conferences, the banks are all there. All of the banks are there and they're presenting. I don't know what they're presenting on, because they don't bank gas, but they're presenting something, which means that they are interested in the industry. But currently they're not taking the step to service them.
Yeah. The only bank that is opening accounts is Standard Bank, right? when I was talking about the high costs of transferring from the banks. It was not a standard bank. It was another bank. And you had to go through Stitch Money. You had to go through an intermediary, basically, to onboard to a crypto exchange, adding another layer of fees. And just, by the way, on this point, the Reserve Bank has advised the banks to loosen up and not be so risk averse to crypto, right?
Yeah, 100%. We are part of CASA. Chainlink's part of CASA. CASA is an association, so crypto asset service providers can join CASA. So, if there's anybody listening that has a crypto company or does anything related to crypto, be sure to check out CASA. And this is one of the main issues that we discuss in our monthly calls. We currently have a membership, I think, of close to 40 CASPs that's on those calls. So we really represent, I say we as a CASA member, it really represents a large part of the crypto industry, the discussions that we have there. And that's where I know, for instance, that there are exchanges or CASPs that cannot open up a bank account. Because even Standard Bank that does service CASPs, they also reached a limit where they said they can't onboard anymore, because they've got so many of these CASPs already. So even they discontinued onboarding for a time. I don't know if they've reopened it, but the last discussion we had about it, there were a few guys that tried to open up bank accounts with them, and unfortunately they couldn't. But that's really quite a sad situation to be part of, because now the choice that you have is either pay extreme fees, or I guess go overseas, use an overseas exchange, or not that you can use some of them because the banks block payments to them. So your options become really limited. And I guess if we really want adoption to continue, the banks are the key holders there, unfortunately, like they are with almost everything.
And we're going to leave it there. That was Henko Fortsman, CEO of Chainix. Thanks very much for joining us, Henko.
Yeah, thanks for having me. Interesting chat.
Thanks for listening to the Moneyweb Crypto Podcast, hosted by Kieran Ryan. To listen to our other podcasts, go to moneyweb.co.za or the Moneyweb app and follow Moneyweb News for daily updates.